Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning and welcome back to the podcast Become Sensible. Today we talk about one of very hot topic on the news, on the markets, on the economies. That is how the tariff tax will affect you as small business owners and how you can forecast with the clarity and confidence in your business financial. And I also want to say that this is a very hot topic, but also very controversial in terms of like politics, about opinions, about how things affect. To be honest, I am a CPA, I am an accountant. I'm not a politician or advocate or anything else. So maybe my conversation is more focused in terms of how it affects you in terms of business and what you are as the business owner can plan, can forecast, and can help your business not only surviving but also thriving in this economy condition and what you need to do to forecast your business. And I think one of the things is in the business, most of the time as small business owner, you're more reactive and you like try to react to solve the problem at that time. But one of the things that always create so much confidence and clarity and success for your business, that is the ability to forecast and looking forward into the future. And I can say that macroeconomies always affect us as small business owners at microeconomies because we are part in this giant economy, and any like big policies, especially like tariff tax on the import, it will affect almost all of us as small business owners and consumer. So I just want to talk about a little bit like how you can forecast on this situation. So let's dive in. Tariffs. Number one is what is actually tariff tax? Tariff tax is basically the tax that imposed on import product into the U.S. Like normally the import tax is smaller and it's depend on the relationship between the country and country. The tariff tax may be a little bit different, but this time the tax will be both a very huge giant number, like 20%, 30%, depends on the country and type of good and product. And that would like affect almost every single thing because you know that we American, we don't have huge manufacturing in every part of the product that we make here in the US. Many of the material is actually import. And so in this situation, we will talk about what type of the business you are in. Is this you are in the product base or you are in the service base? And then you also, maybe some people only specialize in trading. It means that you import the product in and you actually like distribution in the US market as you just like the middle person do the commerce and the trading. You don't own the product, but you also do not change the product to deliver it to the consumer. So that is the part of it. So one of the biggest part is how to forecast under uncertainty. The moment like this is we need clarity, is not chaos. And one of the things that you need to do is actually understand your business financial. And this is why I always say that if you understand your profit and loss and balance it, in the regular context, it will be very helpful in normal operation, but in this situation, it is extremely important. That is, if number one, if you in the product space, it means that you import the material or parts or many different things that to the US, and you need to be like manufacturers or produce the product in the US and then sell it in the US market. You look at your cost of goods sold. Take a look very deep because that will be like the most directly impact into your financial situation of your business. Look at this and check what is the part, what is the material, what is the cost, all of these chains, and trade it down to be like, okay, to create a product of its life. For example, I just make it simple on the camera is a glass. To make this glass, what is the material that go with it? Trace down the main material and what is the change in terms of like import tax that affect this item when you manufacture the product. Then after that, including like shipping, custom, any handling fee, that's most of the time it changes in terms of your cost of goods sold. And then the big part of it is supply and the material that's created on the cost of goods sold of your product. And then you think about number two is do a scenario analysis. Any of these material, will you be able to find something replacement for it that in local in the US that you don't need to be like imported? Because at the end of the day, if you import a product, for example, a material that's cost $5, but now it has 25% of import tariff tax rate, that will be cost $7.5 per material per unit. Then this is if you can get a replacement products in the US or the material in the US that costs almost similar, that would be perfect. But if you don't, so that's just why I run couple scenario analysis. Will you be able to replace the material, something in local that you don't need to like import it? Or will you be like import majority of it or something else that will happen? There's couple scenario that in your industry, you understand it and list it out. Okay, if you do the scenario one, what is will change in terms of your product costs and what is will change in terms of financial your business and your situation. And it's apparently it will change in the cost of goods sold. Number three is change and evaluate in terms of pricing and packaging. So in terms of pricing, not everyone can pass down the change in terms of cost to consumer at all. Not everyone, especially like you as small business owners, think very carefully in terms of whether you will be able to change and pass down the increase of the cost into the consumer or not. And that is why the step two is in scenario analysis is very important that you know which part of it you can replace and use in the material in the US or in-house you can develop. That would be changed a lot in terms of the cost structure for you. And once you get down into, okay, what is the best scenario that you and likely scenario that you can go with it, then go to the next step is how that it will change in terms of pricing to consumer. Will you be able to pass that price to your consumer, your customer, or is this you hold it on and you cut it back in terms of profit margins? And this is why I understand very well in terms of the structure of your financial report. What is your cost of goods sold? What is your operating expense? What is your gross profit margins? What is your net profit margins? Will this change your net profit margins or not? And if it's just like in multiple scenarios that you can analyze with your team, pick the one that is likely that you can perform and you can do it and test a past run in it. But that is very important in terms of pricing, whether you be able to push that pricing into your consumer. And I have to say, it's not everyone can push 25% price increase into consumer at all. So that is what you need to be like very carefully. Number two is think about how you packaging the value. So one other thing I think like very popular on last year, people talk about how Chipotle, they portion up their lunch, it just become smaller, and people was always make a joke in terms like put more chicken, put more avocado and thing into it. Maybe have a communication with your customer or like explain it or change the way that you package things. Is this will the same volume, the same quantity, or is this that you be able to change in terms of like how much that you can put it in? And it's not, of course, not try to trick your consumer, your customer, but it's just in the way that it works for your business, but also is reasonable and not reduce the quality of your work toward your consumer. And then step number 4 is review your cost runway. In any time that economy changes in terms of policy, in terms of uncharted territory or something new happen, like during the COVID year, always have a plan in terms of cost, because that is where that you can stabilize your business and navigate it as you go, because we don't know how this affect and how long will be last. So cash actually will help you to navigate in the next couple months in the very well way. And finally, step 5, be creative. Be creative. And I think all of us, the business owners, have a one thing. Creative is in the way that you find a solution, a strategy for your business. Maybe all the material that you have or the product that you have, you can add into a bundle or add into the different tier of products or like segment that you can still show your customer, but then serve directly into the niche like of your customer at this situation. So this is also applied for if you are in service-based industry, which is you provide consumer consultant advisings and provide the service pay. They don't have a cost of goods sold, so it's not directly a fact in terms of the cost structure of your business. But what has changed is in this, because everyone in the economy is together the same way. If it's changed in terms of product, then and it's directly affect every single day consumer behavior in terms of whether they buy, they need to consider whether they buy this product or not another product, because their budgets is remain the same, but then the product's price and quantity is changing. They will need to be considered whether they spend on A or they spend on B or on C. And because of that, it's indirectly actually affect everyone in economies, including the service-based people, that because you now need to be like, okay, because your customer, your client is considered whether they spend all of that, because their budget is not changed. It's the same way in inflation, that the budgets of people is not changed, but the pricing and the ability for them to buy things is changing. And so if you on the service pay, your forecasting, your assumption in terms of your forecasting in the finance of your business is a little bit more abstract, and make sure that you find the assumption and the key factor that will affect in your business is like whether that is conversion rate of your customer, your potential customer and client, the segment of client that you serve will this change in terms of this economy, and whether the pricing's elasticity, whether like people are more sensitive with the pricing or not. That is one of the things that you need to be like put it into your assumption in your forecasting and break it down. And I think in service space it's a little bit like harder because it's not directly and obviously so on your financial statement. But underneath of every financial report, it actually have an assumption of it, whether that is the confidence on the customer, the client, whether that is the segment, whether that is their budget, whether that is their trust and relies on how necessary your service towards to their life, whether they have a optional or like something else that they can replace instead of use your service. And so think about those assumptions, and because of that, it will change your forecasting in terms of revenue. And in terms of cost of the service space, it's a little bit like indirect in the way that it's changed. In the service space industry, the most expensive item in your profit and loss is your labors, that's your employees, that's your contractor. And whether that will be changed or not also is a factor in how this rolling forward. But I want to say that it needs to be like considering some of your scenario analysis. Otherwise, you maybe like miss the whole part of it in terms of forecasting, and your profit margins maybe like just slide down into the bottom of it. So make sure that you actually consider that part. And I mean, this is no precisely way to do this way, but it's need to have a strategy analysis, and based on the data and analysis, you have the strategy to go with it. And as always, like during the COVID year that we go and we don't, but be very aware and understanding all these policies moving, then you adjust your strategy as you go. And I hope that this episode is actually helpful for you. One of the things I always say that we need to be like very level-headed as the business owner, blending over being like so panicked in the chaos of the news and the information. And I just hope that this episode give you some direction and the way how you can like forecast for your business. And especially this is April, which is the beginning of a new quarter. And I appreciate your time today, and I'm looking forward to the next couple episodes. Thank you. Bye-bye.